Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next to. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, FOMC is over and we saw bullishness on gold and sell-off on the chart of DXY or US dollar index. But if you look at the news, then you will see that there was rate hike of 25 basis points, but still dollar index fell. We saw a classic example of buy the rumor sell the news couple of days ago when dollar index was bullish, when dollar index was going up just by hoping for interest rate hikes. I told you guys that after the news, even if market goes for rate hike also, there's a high chance that the market makers will try to book their profits and we may get to see correction sell on the chart of DXY, and we saw that only. So if you look at the chart of DXY, then we can see that dollar index is standing at 100.82 right now and the correction is still going on. And if market breaks 100.60 level, then further downside is possible. And to continue the upside, then dollar index need to cross 101.25. Okay, right now it is stuck in the middle here. The previous support, if you remember, 100.80 was the last support. So right now market is standing here. So let's wait and watch what dollar or DXY does. Again, I'm repeating, if DXY break 100.60, further downside possible, and to continue the upside, DXY need to cross 101.25. Let's wait and watch and plan your trades accordingly. Okay, and you can see if dollar falls after Fed rate hike, dollar fell against a basket of its peers on Wednesday after the Federal Reserve raised interest rates by a quarter, 25 basis points, citing still elevated inflation as a rationale for what is now the highest US central bank policy rate in 16 years. Dollar slips at Fed rate hike cycle seen ending. The dollar was on the back foot on Thursday after the Federal Reserve delivered what some expected to be its last rate hike. So many are saying that this is one of the reasons why dollar index fell. So but ultimately it fell, and we are traders, we need to plan our trades, isn't it? So now let's look at a chart of gold. So if you look at a chart of gold, then to be honest, the number of trading opportunities are very less right now because we need to wait for the market to settle first. So if you're looking for many trading opportunities on the chart of gold, then my dear friend, I'm sorry to disappoint you, but okay, but we do not have much. Okay, so as you can see right now that gold is trying to go up right now. If you already have a buy position, then you can be on the trade. No need to exit. Further upside possible considering the weakness on the chart of DXY. Be on the buy position. But if you're looking for fresh position as a day trader, then obviously this is not the ideal position to trade. Why? Because see, if you take a buy position right now, then obviously your risk to reward ratio will not be in your favor. As I always say, my dear friends, when we will see a market in uptrend, buy at dip should be a trading strategy. So this is not the buy at dip, and fundamentally also we do not have the big support. Okay, so that we can go for a blind long position on the chart of gold, isn't it? So nothing is favoring right now. So if you are planning to take a buy position here, I will say that wait for the market to settle first, because your risk to reward ratio will not match. And most importantly, you can see if we draw Fibonacci here, then market is struggling around the Fibo 78.6% retracement level, so which is also a big red flag. Okay, not to take a buy position right now. But yes, if gold breaks 1986 level, okay, if gold breaks 1986 level, this level here, then we can consider that market is bullish again, and you can go for another long position, another buy position above 1986-87, and your target will be 2000. 2000 will be your next target. So in simple words, okay, if gold breaks 1986-87 level, then we can consider the trend is continuing, the uptrend is continuing, and we can look for a fresh buy above 86, 87, and we can keep our targets around 2000 or more than 2000 level. But in this range of right now, we do not have any clarity. As a result, it's better to buy at retracement only, and right now we do not have any proper retracement level also. See, if we draw a trend line like this, then we can expect some support around 1970 level. Around 1970 level you can expect some support, and right now 1970, this level seems to be far away from the current market price, isn't it? Yes, it is. And before 1970, do we have any proper retracement level? Obviously no. So if this is the point of correction on the chart of gold, listen to me carefully. If this is the point, this price rejection point, okay, this is the point of correction for gold, then around 1974, around 1974 to 1975, we can expect some support. But is this a proper retracement level? Obviously no, because still the market has not settled yet. So let's wait and watch where the market takes support and or what the market does. By the European session, probably we will get a clear picture. Again, I'm repeating, if gold breaks a 1986-87 level, then only we will get a clear picture that trend of the market is continuing, and we can look for a fresh buy for a target of 1991, 999, 2000 or more than 2000. But yes, gold needs to cross 1986-87 level, and in this particular position, it is better to avoid right now, because our risk to reward ratio will not match. If you already have a buy position, long position, you can be on the trade, no need to exit. But if you're looking for fresh position in this level right now, then obviously this is not the ideal level to trade. And considering the upside of the market right now, it is better to look for a retracement level, but sadly we do not have any clarity also regarding retracement. Around 1970 we have a trend line, we have some previous price ejection, so as a result we can expect that around 1970, 1971 there will be some buyers present and market can bounce. If market bounces, we can go for a buy around 1970. But before 1970, we do not have any clear support level. Around 1974-75, we do have a minor support, but it depends on the volatility, and I'm not very sure also. So let's wait and watch, let the market settle, and most importantly, we have a news coming up during the US session. You can see a long list of events, so be careful. As I always say, I'll repeat again, if you are a new trader, if you're a beginner, if you have low capital right now, close down all your US dollar position before the news. Be a trader, not a gambler. You will get plenty of opportunities to make money in the market. You don't need to gamble with your capital during the news. And the other traders also, you need to be careful. Okay, so let's wait and watch. And that's all from my side, my dear friends. Bye bye, take care. This is my analysis. I can be wrong as well, so please follow proper risk management. Risk management is above all. Bye bye, take care.